After a long period of global growth and strong market returns, volatility returned to markets in October last year. This created a challenging environment for investors. So what's been driving financial markets? Is volatility here to stay? Share markets have been fairly volatile lately. Big price falls and scary headlines, followed by big price rises and then falls again. It can be a bit alarming if you don't have the right perspective. Monetary policy, or the level of interest rates, and geopolitical risks have been the main causes of recent volatility. This is particularly so in the US, where interest rates have been rising. In 2018, 4 increases in the US cash rate caused economic momentum to slow. So investors had to reconsider their positive outlook for growth assets. Meanwhile, a few key events have unsettled investors. Tit-for-tat comments on trade from the US and China, concerns that the Chinese stimulus will be less effective this time around, and ongoing uncertainty surrounding Brexit. In Australia, a few events have brought additional uncertainty. The Hayne Royal Commission, the federal election, and how much the cooling housing market will affect consumer spending. Your super and pension are long-term investments, so a good approach is to look beyond the daily headlines and instead focus on your long-term goals. Think about investing in a mix of good quality assets that can grow your savings over time, and think carefully before making any significant changes. Remember that markets are unpredictable, and trying to time them means you must get 2 important decisions right: when to get out and then when to get back in again. If you switch to a more conservative option after a market fall, you're locking in losses, which may mean you miss out on any rebound which occurs. Sticking to your long-term strategy usually gives you the best chance of achieving your retirement goals. Markets are now highly sensitive to US interest rate expectations and the geopolitical risks we mentioned earlier. We're expecting volatility to remain high for some time to come, but are also hopeful that we'll see resolution in at least some key areas of uncertainty. The outcome of Brexit in March and the ability or inability of the US and China to agree to a trade truce will be key near-term events that will move markets. We've already started to see some positive developments this year, and markets have responded in January by regaining some of last year's losses. We're not out of the woods yet though by any means, but if you're feeling uneasy, be sure to speak to your financial planner.